Good afternoon, everyone, and welcome to another Port Jackson Securities webinar. I'm Aidan Lane, I'm one of your webinar hosts, and I'm joined here with Con from FOS Capital. Con, how are you today?
Good, thank you, Aidan.
That's good, Con. So Con's calling in from Melbourne and one of the warehouses for FOS Capital. I'm calling in from home, and we're working from home in Sydney at the moment. But I hope you guys are all well, and welcome to the first webinar of the year. Happy New Year and Merry Christmas for those who we haven't seen or spoken with. So for this webinar, we're just going to go through some questions. So I've got about 10 questions for Con, just to get a brief understanding of the business and to dig into some details about where we are with COVID, what we can expect from FOS Capital in the long term. For the viewers, we'll take live questions at the end. Thank you to those who have emailed in already. If you want to type in a question, there's a box on the bottom right-hand side of your screen. We'll do our best to answer all of those at the end. If we don't get through to all of them, we as a team at Port Jackson will give you a call and do our best to answer them based on our knowledge of FOS Capital now. And if we can't, we'll reach out to the business if it's a pressing question. So we'll get into the questions now. So Con, just before we get started, could you give sort of a brief background of yourself and how you've ended up at FOS Capital?
Yes, so I started off out of school as an apprentice electrician, and the company I worked for also owned a lighting manufacturing business. So after I finished my apprenticeship, I moved across to lighting and got involved in the manufacturing side of lighting. Did that for a number of years and then learned all aspects of the business. And in '91, left the company and started my first lighting business that was called Moonlighting. And that was a successful national lighting manufacturing business that was eventually sold about 10 years later to the Gerard Lighting Group. And then from there, I developed the first LED traffic light that is now rolled out across Australia. And that was in another company we set up, and I sort of sold out of that after a few years. And then in more recent times, I got back into the commercial lighting industry. And then in 2019, we started FOS Lighting effectively as a startup from a standing position in April of 19. So I got back into the commercial lighting industry, and we've done 3 acquisitions since 2019 to build the business to where it is today. So my history has basically always been in the electrical lighting manufacturing industries for close to 40 years now.
Yeah, sure. And so what's your role that you're sort of operating in right now as sort of the CEO?
I'm the managing director of FOS, and myself and my 2 partners are also the major shareholders in FOS. We own 65% of the capital of FOS since we did the IPO back in June, and got some new shareholders on board. So we're the major shareholders, and I'm the managing director and very, very hands-on, in running this business.
Okay, thanks for that, and giving the background as well. And then just for the viewers that might not know a lot about the business, could you give a brief, background into the business model and sort of the way that the business brings in revenue?
Yep. So we either manufacture or import commercial light fittings that go into commercial projects. So anything from offices to schools, hospitals, prisons, sporting stadiums, and any commercial building you can think of, retail outlets, supermarkets. We design and manufacture and supply the lighting that goes into those projects. And in a lot of cases, we work with the engineers or the architects when the building is being designed, and we work alongside those engineers and architects to design the appropriate lighting to get the appropriate effect and efficiencies, and keeping up to date with the latest sort of technology that lighting brings. And right now it's LED is the main lighting source that we're using. So we have a very wide and product range, enabling us to fit out all these different types of projects, because a lot of the lighting is very specialized to suit certain requirements. So we've got a large range, and we then design those products into those jobs. And at some point, those jobs go out to tender through the builders and the contractors, and we'll pick up an order to supply the light fittings to the project that we've designed them for. We don't install the lighting, we just supply the lighting to the electrical contractors who go on and install it. So ours is pretty much a product business where we've got a range, we build the product to order. We don't really hold finished goods stock. We hold a lot of raw components, and then as we get the order, we build it to that specification for that particular project on pretty much a just-in-time basis. We're supplying all around Australia and New Zealand at the moment. We have offices in all major capital cities, including New Zealand. And we have a factory in Brisbane that does 95% of our manufacturing comes out of that factory. And about 50% of what we sell is our own manufactured products, and the other 50% is other brands that we import and distribute in Australia.
Okay. And so what's the reason of sort of making 95% of your manufacturing out of Brisbane? Is that just because the facilities there are the best, and then you can transport it easily, or?
So the way that the manufacturing has evolved in the lighting industry, but also in the broader industries around Australia, is over the years, more and more manufacturers have just disappeared and been replaced by imports, and that's pretty much common across all industries. Because I've got a very strong background in manufacturing and believe that there is a role to be played in manufacturing in Australia. When we started the business in 2019 from a standing start, we were looking to get into manufacturing, and as it turned out, a few months after we started the business, there was a company in Brisbane called Friend Lighting that was actually owned by the Gerard Lighting Group, which is who I sold my business to in 2004. So they were selling off this factory in Brisbane. It was non-core to their requirements. And effectively they approached me and we had a look at it, and we bought the business. It had about 20 employees at the time working out of a fairly large factory in Brisbane, and it was all set up and had all the equipment and the tooling that was required for us to do what we wanted to do. So the reason it's Brisbane is that was what was going for at the time. That was the business that was available to be bought, and there's only probably 4 or 5 companies in Australia that now do what we do, and that is manufacture fully from scratch products like we do, because most of the other manufacturers have disappeared. So we bought that factory in June of 2019, and then in the last couple of years we've expanded the people and the products that we make out of that factory. So we've got 30 people there now. We've got 2 or 3 more product ranges we do. We've doubled the output of that factory over the course of the last couple of years. And we've taken the products from that factory that were only being sold initially into the Queensland area. We now are able to sell those products on a national basis. So really, all our resources from a manufacturing perspective go into that Brisbane operation, and then all of the other offices around are really sales offices, selling the products to the customers, and the product then just comes out of that. The finished product comes out of that manufacturing facility in Brisbane, and then we have another warehouse in Melbourne where we hold all of our imported products, and we distribute those around Australia from that's where I am at the moment. I'm in the Melbourne office, which is also the warehouse that we have here.
Okay. No, thanks for giving us an understanding of how that developed, and obviously the opportunistic way the business actually acquired that manufacturing facility. Yeah. And just before we move to the next question, which it does relate to that manufacturing business out in Brisbane, I just want to get an understanding of the margins that you sort of make on the imported products versus the manufactured products. What sort of product do you make a better margin on?
I don't know if it's by design or not, but across both product ranges, we are averaging somewhere between 40 and 45% gross profit margins. And it varies product to product and month to month, because there's a whole lot of variables that go into play. But when you average it out, both product ranges are 40 plus in GP margins. So for us, it sort of doesn't matter whether we sell an imported product or a manufactured product. We're still getting the same, gross margin out of it. So we don't really push one or the other. We push whatever product we think is the most suitable to go onto the job, ultimately. And the only time that varies is about availability. So in our industry, by the time it goes through this process of tender and order placed and all that, and by the time we get an order to supply products, we're not given a lot of time, usually a few weeks to supply. So the advantage of the local manufacturing is we can turn around projects much quicker than waiting on fully imported product. So sometimes we will push our manufactured product purely on the basis that we can deliver it in the time frame that a client requires it. But we're not really fussed whether it's manufactured or imported, because we effectively get the same margin. But we're finding more and more through what's been going on with COVID lockdowns and supply chain issues and what have you, that people are wanting to know where the product's coming from, because they know it's an unstable supply chain, and if they know it's coming out of Australia, they've got a bit more peace of mind that they're going to get it, give or take, when they're expecting to get it. And we're also winning a lot of work from our competitors who are only importers, because they don't have the flexibility that we have to turn around product in a short time frame. So that's all going well for us at the moment.
Yeah, no, that's great, and that leads exactly into the next question. So COVID's obviously affecting businesses all around Australia and all around the world. And so I was sort of interested to understand, that supply chain management of 95% of production from Brisbane. How are you getting that all around Australia so easily? But then it's also great to hear that you're winning business because you have that manufacturing in Australia. So what's the negatives potentially for COVID? And
look, it's a bit of we just take each day as it comes, like I think most people are living their lives just about. So going back to 2020, when COVID first came in March, a lot of uncertainty about what was going to go on. Within a couple of months, things settled down. We found that we ended up not shutting. We were one of the industries that were able to work through COVID and all the various lockdowns. So we haven't lost a day's manufacturing in the last 2 years through any COVID related issues. So we initially had a small hiccup getting some componentry out of China when they were in their initial lockdowns back in 2020, but that was a really short interruption. Ever since then, we seem to be able to getting our supplies in a reasonable time. We've increased stock of certain components in order to protect ourselves from, not having supply chain issues. So we've been doing that for a number of months, where we're ordering more stock and getting it in quicker and just holding higher levels of stock in order to make sure we've got the componentry to supply the projects when we need to. Now, that pretty much happened for the year and a half, 2 years from 2020 all the way through till just now. And I think, like most other businesses, we're starting to get a little bit of the effect of staff now having to isolate because they either have COVID or they're a close contact. So we're now starting to get a little bit of downtime, one person here, one person there. Literally, we only came back to work last week, so we're only just starting to feel the effects of that now. So bit uncertain what's going to happen on that front over the next few weeks as the this not the lockdown but the isolation issues kick in. But from a componentry point of view, at the moment we're managing that really well. And on the flip side, there is a little bit of disruption on transport. So we manufacture in Brisbane and we're shipping it all around the country. So in pre this period, it was very reliable. If we shipped it out of Brisbane, it would be in Melbourne 2 days later, 99% of the time type thing. Now the 2 days becomes 3 days or 4 days, and sometimes they can't tell you where the shipment is because they can't track it or whatever. So it's a little bit disruptive at the moment because of transport, but nothing that's causing us major dramas at the moment. But like I said earlier, you're living it day by day, and you're trying to, adjust for whatever's happening to you on any given day, and try to cope with that. So everyone's, we employ 57 people, Australia, New Zealand. So everyone's sort of hands-on, playing a role, managing jobs on a day-by-day basis to make sure we can, see ourselves through this period in the best possible shape we can. And I think so far we're doing a reasonable job of that. Yeah.
Yeah, sure. And so I assume, the clients that you have in managing their expectations at the moment, that's sort of the forefront of what you're doing, a week back into work, and, things are really a different sphere to what they were even at the end of last year.
That's right. And so there's continual communication between the factory and our sales team and then the customer, because it's, some of these jobs are changing on a daily basis from a delivery point of view. If something doesn't come in on this day, it pushes the job out by 1 or 2 days. So we've got to keep communicating that. And I think, for the best part, the customers realise that, we're all going through this together. They're obviously, everyone gets disappointed when they can't get what they want when they want it. But at the same time, they know we're doing our best to mitigate that. And like I said earlier, I don't think it's causing us a major problem at the moment, but that could change over the next few weeks. Don't really know.
Oh, yeah, that's good to get an insight into what's happening in that space. But it's good, obviously, for the manufacturing side of it as well.
It's happening everywhere. You go to the supermarket and you start to realise it. So every bit of your life is sort of, impacted in some way by this. So I think everyone, in business is just dealing with just coming up, just being flexible and trying to come up with ways to just get through in the best way they can. And obviously some are going to do it better than others, but that's what everyone is having to do. And we're fully on board with that, and we're working hard to keep the show on the road.
Yeah, I think the most important thing is that communication with clients, because you're managing what you can manage, and outside of that, there's not a lot you can do. And it's the hope that clients understand that and respect that to build the long-term relationships.
In our industry, there's contractors on the building site waiting for goods to install, and they're making arrangements for that. So if things aren't going to arrive on the day they think they're going to arrive, we at least need to give them as much notice as possible so that they can make other arrangements on site and so on. And that's a flow-on effect for everybody, sort of thing. So we're all doing that, I think.
Yeah, that's good. And I guess the only way to distinguish yourself at the moment is maintaining that communication and as getting as much product as you can in, and you have the help of the manufacturing in Australia. So
and if
that's
you can do
good.
it better than your competitor can do it, then you come out looking a bit better, and you're better in line to pick up the next job type thing.
Yeah, that's right. And when we start learning how to live with COVID more and more, hopefully you come out on top, and you can sort of fill more of those contracts and build that order flow even more.
Exactly.
So we'll just move on, outside of COVID. Can you give some more information and insight into your integration with JSB?
Yeah. So what we're doing with FOSS, and the reason we listed FOSS in June of last year, and it's from the history that I've got in this industry. So the lighting industry is very fragmented. There's a lot of different lighting companies because lighting is very specialized. So there's a lot of companies, big and small, and there's not a lot of M&A activity in this industry. So we, with the experience we've had in doing this before, we think there's a role to play to consolidate, this industry and bring some players together to get full geographic spread, to get a full product range, to build customers. So the intention of FOSS was list it to have access to capital to do acquisitions in a consolidation type play. So I mentioned, when we first started, we bought the Friend business, the manufacturing business in Brisbane, and then about a year later, we bought JSB Lighting, which was a 30-year established commercial lighting company, operated out of most states in Australia. So it was being sold. We acquired that, and we've, in the first 6 months that we owned it, we fully integrated it into FOSS. And by the time that happened, we basically had full representation in all the major capitals in Australia. We brought their products into ours, we brought their people, we put our systems together, and that integration was completed fully at the end of the last financial year, June 21. And so since then, it's been running as one enlarged business. And then in October last year, we bought another company called EcoPoint, which is New Zealand based. And again, they're a commercial lighting business, been around for about 12 years, work in a very similar way that we work. So we acquired them in order to have a proper New Zealand presence. Prior to that, we had one person working out of New Zealand from the JSB operation. So we've done 3 acquisitions since we started the business in 2019. And in that sort of two and a bit years, we've put together 15 product ranges, 57 people. We're doing about $15 million in revenue on an annualized basis now, and are getting real penetration with people and products into the market. And whilst we're bedding those down, and they've basically been bedded down, we're working on other acquisitions to bring in. So really the outlook of FOSS over the next 12 months, 2 years is going to be bolting on 2 or 3 or 4 more commercial lighting businesses to what we've got, to get us to what I call a critical mass sort of figure. We're currently around about 15 million revenue. We want to get to 50, in the next couple of years. And at that point, we'd be one of the largest lighting companies in Australia and have proper mass to be able to work through and get the margins better and really squeeze the profits out of business when you've got that sort of scale. So really we know the industry, we've got the listed companies, the vehicle to do it in, and we don't really have much competition in buying these businesses because it's an industry that doesn't do a lot of M&A. So really we're the only ones really actively, going down this path. So we get to negotiate transactions broadly on our terms, and there's plenty of deals to be done. So that's the way it's going. And JSB, going back to your question, was one of those opportunities that came along that we grabbed and ran with, and we tend to be a little bit opportunistic. If there's something there, we'll move quickly, and we'll if we can find a way of making it work, we will. So that's our nature of how we do things. So there'll be a bit more of that to come in the coming years.
Sure. No, thanks for going in detail about JSB and sort of the outlook of what the business is doing for the long term. It goes into sort of many of the questions I was about to ask. But on sort of what you're speaking about now, could you give us an understanding of how big the market is? And so say if you do end up with a 50 mil revenue, what position of the market do you think you'll sort of have in terms of market share?
Yeah, so broadly speaking, this industry in all lighting is around about $2 billion a year. And it's sort of broken up into what I call the commercial side, which side we operate on, and the domestic residential side. So, so I'll give you an example. Beacon Lighting, it's another listed competitor. they only work predominantly in the domestic retail side. So they've got retail outlets supplying, you know, mostly houses that are being refurbed or built. So and you know, broadly speaking, it's probably a 50-50 split. It's probably $1 billion in the retail side and $1 billion in the commercial side. And on the commercial side, that's broken broadly into a couple of categories as well. So there's your volume product that is really imported from China that is stocked on electrical wholesalers' shelves, and it's, you know, all your standard stuff that the contractors come in and buy off the shelf and go and install. So that's probably half the market, about 500 mil. And then the other 500 mil is the area that we work in, so which is the specification market. So we work on high-end commercial projects that require design and specification. So all of our products are more high-end products, and they're really built specifically to go into a specific project. So we operate in that segment. So out of the 2 billion, it's about 500 million is the area that we operate in, and we're initially trying to get to a 50 mil of the 500 mil, which is about 10% of that area. So even if we get to that point in the next couple of years, we might be one of the bigger players in that area, but we're still only 10% of that market. So there's still plenty of growth to come beyond the 50. 50 just an initial target we're sort of setting ourselves to get to in the next couple of years, and then we'll reset that target, you know, accordingly.
Sure, and just for clarification, that, you know, $500 million market that you're focused in on, is that just Australia, or does that include New Zealand as well?
Look, the number's pretty loose because no one's got proper statistics on this. The New Zealand market isn't that big, so it doesn't actually include New Zealand, but it could include it because the numbers are a bit rubbery, you know, whether it's 500 or 550 mil, whatever it is. So we treat New Zealand like effectively another state of Australia. That's how we treat it. So so it probably is a little bit bigger than the 500 mil, but from a broad perspective, you know, that's enough. That's all the information we need, you know, to target ourselves, and off we go. And New Zealand market is also fragmented like ours is. So we see opportunities in New Zealand, as, you know, in the acquisition space as we do in Australia.
Thanks for going through that as well. And so when we consider, you know, these mergers and acquisitions as sort of the pivotal part of how you're going to grow in the sort of, you know, next few years, what are the hurdles that you'll need to actually jump over to get those done? And I know you've spoken about the competition, and there's very little competition in the market in terms of those M&As, but there's always sort of, you know, threats involved in that situation. So what are the biggest threats in your perspective?
Yeah, so mainly it's identifying, you know, the right acquisition for us at a particular time. So we might look at a lot of things, and we're probably always talking to 3 or 4 at any one time, but it's a matter of working out which is the right fit for the time. So sometimes it's size, sometimes it's location, sometimes it could be a specific product range that somebody has that we think, you know, would fit well with us. So it's really identifying, you know, the right company at the right time for the right fit, and then working out you know, the biggest thing with acquisitions is the cultural difference between, you know, our company and the company we're acquiring. So if we don't think there's going to be a culture fit, we'll probably walk away from the deal because it'll be a problem down the track, sort of thing. So now, luckily enough, I've been involved in M&A for 30 years, so done plenty of deals, so we know sort of what to look for in a transaction. You're trying to do a transaction so it's valued correctly. You know, you don't want to overpay for something, and then, you know, you're working much harder to try and, you know, recoup those funds. So it's all of those things coming together. But the advantage that I mentioned earlier is because we're not really competing against anyone, where it's not like we have to, outbid somebody to win something. So if along the journey through due diligence we find that something's not right or it's getting too pricey, we're happy to walk away and go back and look at something else. We're not in a super rush to do anything. We move quickly, but on the same token, we're not doing it just for the sake of doing it. So it has to be right. And so far, with the 3 acquisitions we've done, Friend, JSB and Ecopoint, pretty much everything's gone to plan plus some. So we've got a good track record so far, but you never know what the next one's going to bring. But so they're the challenges are more, not external challenges. They're more internal challenges that are in our control, because because we're not fighting against anybody else. It's really us identifying the right acquisition, doing enough due diligence around it, pricing it correctly, and executing it. And then along with all of these things, we have to fund them. So there's usually some sort of capital raising that goes alongside these acquisitions. So we need to have the market support to be able to go out and raise capital for those acquisitions when they come along. So got to stay close to the market and keep people up to date with their story and where we're at, so that there's enough support on a capital raising when the time comes.
Yeah, and just on that capital raising, obviously that was a part of the reason you listed and you went to market. How soon do you think you'd be looking at another capital raise in terms of your cash position?
We only raised $3 million when we listed in June. The company was profitable before we listed it, and it's remained profitable. So the $3 million that we raised predominantly went to the first acquisition, which was Ecopoint in New Zealand. And so effectively now we don't have funds to do any other acquisitions without raising capital. So sometime in the next few months, we're working on 2 or 3 acquisitions at the moment. Now, depending on how they go and what the timing of those is, but it'll most likely be in the next few months. If we can bring one to a sign-off stage, that's when we'll go back and raise whatever the amount of capital is required to fund that transaction. So it's coming up in the short term, I would say. Definitely before June this year, I would expect.
Sure. Thanks for giving an insight into that and where the sort of business is looking in terms of why you went to market and the relationship you need to have with investors as well. Just in the interest of time, I just have one more question that is sort of interest to me as I was doing some more research into FOSS Capital. It was to do with how the work from home landscape will actually cause businesses to start renovating their office spaces and sort of changing how an office dynamic might work. And I was wondering the opportunities that would bring to you guys as a business, but whether you guys are also think that could be a potential threat if office spaces start to get smaller and not as much construction is done in building new buildings.
So we were one of the industries, although we kept working all the way through the various lockdowns, we were one of the industries that really didn't benefit from COVID, because from the commercial building point of view, everyone didn't know what to do. So a lot of projects that hadn't started went on hold whilst everyone worked out what the new normal was going to be. So our industry has been fairly solid over the last couple of years, but it hasn't been booming. We actually expect over the next 2 years to get the benefits of what's happened through COVID from an activities point of view, because people are now starting to work out roughly what the new look's going to be, and regardless of whether people are working from home or in the office, it's causing all of these offices to be rehashed in one way, shape or form. So now, and it's a thing that's moving all the time, but co-working and co-sharing is, which was a big buzz leading into COVID, is now not as big a buzz because of people cross-pollinating in these offices. So even though people are working from home, they need to come to the office, and when they come to the office, they want a bigger workspace and more area around them. So regardless of what the final model ends up looking like, and I don't think anyone even knows what that is, it's causing more work, not less work, to happen in the construction industry, because they're either modifying them offices to become bigger or become smaller, but either way they're renovating and refurbing. And the government, both federal and state, have been pushing hard on infrastructure spending to stimulate the economy, and we are a direct beneficiary of the work that's going to come down the line on government spending. So things like the Melbourne Underground Rail, it's one of the largest projects going on here in Victoria at the moment. You know, we're working and doing work on that project, and so we expect over the next, you know, foreseeable future, there's going to be more work, not less work, for us and our industry. So we should benefit from that along the way. So and that's regardless of whether the offices become bigger or smaller, or whether people work, you know, from home or not, type thing, because it's just causing everything to change. And regardless of whether it changes up or down, it's causing some work to be done alongside that. So at the moment, we're all good, I think.
Yeah, I'm sure that change, you know, in an office space, one of the first things I'd look to change would be the lighting, and how that would, you know, affect an office space.
Every time they relay out the office plan, the lighting has to change and move accordingly. So, and then what happens if they've got older lighting, not LED, they use that as an opportunity to rip out the light and put in new lighting and LED. And there's still plenty of offices that are still running old technology, so there's plenty of work that will come out of that. And if they've already got LED lighting, it still needs to be modified and moved around to suit whatever the new layout's going to be. So there's always just about, I don't know of any project that gets done that hasn't got lighting in it. It'd be very rare for any project that I know of that hasn't got a lighting component to it. Some more than others, but so any job that goes out there, there's some sort of effect that our industry gets to benefit from, and it's our job to get out there and find that work and bid for it, design it, and win the order for it.
Yeah, definitely. And just we'll move to a couple of live questions from the floor. Just in the interest of time, we'll just do a few of them. So there's one question here. It's quite interesting. They're asking about, you know, who are the major competitors in the commercial lighting industry that pose, you know, a threat to this growing industry that you're trying to build?
So it sort of varies state by state, but some of the bigger national players are Eagle Lighting, the Gerard Lighting Group, which has got Peerlight, which is one of the largest lighting companies in Australia. There's Philips here. There's Zumtobel. I can reel off 3 or 4 others, but there's probably, you know, hundreds of lighting companies. But of the major ones, there's maybe only 10 or 20. Half a dozen of those I've already reeled off their names. And you know, in theory, they're who we're competing with. We all work in a similar way. We all have extended product ranges. We all go to market the same way by designing using, you know, architects and consultants and engineers. And it's our ability to get in front of those engineers and service them in the best way possible, and also have a product range that is able to do the job. So they're all, you know, been around a long time, and we sort of all know each other. But they're the main ones that we would come up with on a regular, on a day-to-day basis.
Sure. No, thanks for that. And then looking to another question. This question is, how do you distinguish yourself in terms of the product that you bring out to market? And so I think they're trying to get at, you know, you're talking about having high-end product. And so does that involve having certain niches in your product, or just having a larger product range in general? Can you just give some insight there?
Yeah, so our product range is very niche. So we have certain products that only get used in certain applications. And so we need a wide range of products, because we we don't know what job we're doing on a day-to-day basis, so we need to have product to go into any job that comes along. So there's some product ranges that we might only use 2 or 3 times a year on those specific jobs, and there are other product ranges that we use on an everyday, daily basis. Now, in general terms, most of the major lighting companies all have all the main products that we've got, and you can argue about whether ours is a bit better than theirs or theirs is a bit better than ours. We're all much of a muchness, I think, in that sort of way. So we distinguish ourselves more from our way we service our customers than relying on the product to get to. You still have to have a good product, it has to perform. So where we push hard is servicing the customer in the initial design area and design phase, and coming up with good designs promptly to allow them to do their work, and then we back that up with being able to deliver a quality product in time when the time comes to get the order and deliver it. And I think that's where we are, if not the best, we're in that top 2 or 3 on the delivery, because the factory gives us that extra edge to be able to do that. And also our work ethos, we're very focused on servicing the customer and making sure our product's there on time in order to get the next job, and not give them a reason not to give it to us, sort of thing. So we've got the products and they're important, but ultimately it's a people's business, and it's our relationships that we have with our customers and our suppliers who help us deliver our product that gets the job done for us.
Sure, so it's a matter of distinguish yourself, not based on the product that you're bringing to them, but the service and the relationships you have with the clients, which makes a lot of sense.
I mean, we have to have the product, obviously, and it can't be inferior, but ultimately, we're not competing head to head against whether our product is better than somebody else's product, because in most occasions they perform in a similar way. So it's not really we won or they won because their product was better. It's usually because the relationship and the servicing they're doing with their client is better. And obviously pricing comes into it at some point in time too. So you've got to be broadly competitive with the market. You can't be out of whack with the market. Otherwise, no matter how well you service it, you won't pick up an order if you're 50% higher in price, sort of thing. So, but we can be 5 or 10% higher in price and still win the work because of the reputation and the service levels that we have.
Sure. Just moving on to, there's just 2 questions that wrap up this nicely. The first question just is, if the company does get to, a $50 million revenue in the next sort of 3 or 4 years, where would you forecast the share price to be?
So I'm not going to go down that path of predicting the share price, but and the reason is there'll be a bunch of factors, and the biggest one will be how much capital we raise and how many shares are on issue and so forth. But let me answer it this way. We aim, as we get into the sort of the volumes increase, that our bottom line of profit is a minimum of 10% of our revenue. So if we're doing 50 mil of revenue, we're expecting at least 5, 6 to 7 mil of profit out of net profit out of that turnover. So you can then reverse engineer that about what you think the company's worth and what market cap it is, and then you can work out what the share price should roughly be. So, but we're sitting at about 24 cents, and that's pretty much, we raised money at 25 cents for the IPO, and we've always hovered around that price in the 6 months. We've got a market cap of about 11 mil. We've got net assets of 7 mil. We've got cash in the bank. We're profitable. We think we're undervalued. The market hasn't worked that out yet. So at some point, we hope it aligns. So all we can do is go out there, do our job, grow the business, and let the shareholders decide where the value should go. But the trigger point is going to be the profitability. As I said, we were profitable before we listed. We're still profitable. And as we get to the higher revenue, we'll be even more profitable, and we're aiming for that 10% plus sort of profit margins, so people can work out what the value should be from there.
Sure. And then just to wrap the interview up, sort of a client's just asked, if I was a shareholder of Voss Capital, what can I expect from you as a management team?
So we own 65% of the company. We live and breathe this thing every day. We are highly committed to succeed. We know the industry. We know manufacturing. We know our customers. So we're just going to go out there and work each day to deliver results. We're going to grow aggressively, both organically and by acquisition, as I've already said. So you know, if you didn't look at us after today and opened up the book a year later, you know, you're going to see that we would have done 2 or 3 acquisitions, and we would be, I'm not sure exactly what the revenue is going to be, but we're 15 now. We're most likely going to be closer to 50 than 15 in 12 months' time. So if somebody just closed their eyes and opened them up 12 months later and they go, oh, gee, what did these guys do in the last 12 months? Well, I think that's what we're going to deliver in the next 12 months. And that's broadly what we've already delivered in the last 12 months. If you look back to where we were a year ago before we listed, to where we are now and where we're heading. So we've got a really good team. Most of our people have been in this industry for 20 plus years, whether they be on the manufacturing side or on the sales and marketing side. We're well respected in the industry, and we just know our stuff. So, you know, we're not high tech. We're not, you know, going to change the world with some app. We are just out there as an industrial company, you know, a bunch of guys who know what they're doing, and we think we do it fairly well. And, you know, hopefully shareholders can come along for the ride and help us along that journey.
Great, thanks for that, Con. That was a great way to sort of wrap up this webinar and what the business is on about. So thank you for joining us again today. For questions that haven't been answered, I know there's a few here that I can see. I'll send you out an email.
And I'm happy to answer any questions offline. No problems.
Yeah, sure. Yeah, and I think there are some as well we could answer ourselves. I think, you know, they might have joined late to the webinar, so they missed a little bit. But I'll send those through to anyone who's missed it. Thanks again, Con, for joining us, and thanks to the viewers for coming along. Yeah, feel free to join into any of our past webinars on Port Jackson Securities, and yeah, register for our upcoming webinars as well. Thanks, Con, again, and I hope everyone has a great afternoon. Thanks, guys.